Good morning. I am Katrina Boyer. I'm the Investor Education Coordinator, excuse me, for the Pennsylvania Department of Banking and Securities. And I'm super excited to be chatting with you today about homeownership in uncertain times. I will apologize ahead of time. I have 3 small dogs who sometimes go a little crazy, but my husband's here and he will do his best to keep them quiet. But we'll go ahead and get started. Maybe, there we go. So this presentation today is really going to be kind of 2 parts. We'll talk about the steps that we need to take in order to protect our home in, the uncertain times. And, 10 years ago when the housing crisis happened, those were uncertain times. And now here we are in the middle of a pandemic and we're facing uncertain times again. I was telling Rachel this morning that I had seen a quick news thing, something that 1 in 4 people had filed for unemployment recently. That's a huge number. So clearly we're in uncertain times again. So we want to talk about the 3 steps that we need to take in order to protect ourselves going forward. And then sadly, when we're in uncertain times, criminals and fraudsters become even more active in trying to separate us from the little bit of money that we have. So we'll talk about how we can beware of the fraudsters, and then we'll talk about some red flags and things that we should be on the lookout for if someone offers to help us with resolving mortgage issues. And so the first thing that we absolutely have to do is we have to stay put. We've seen this before where consumers think that, well, I can't pay my mortgage, so I'm going to move out, but I don't want to lose my home to foreclosure. If you don't stay put, or if your clients don't stay put in their homes, the company is going to be less likely to want to work with them to keep them in their home. They're going to assume that you're not interested and they're going to move on. They're going to proceed with whatever the next steps are. So the first thing we want to do is we want to make sure that we stay put and we don't move out. And then the second thing we need to do is that we need to talk to our mortgage company. Now, I say the word mortgage company because that's easier for us to understand. But the reality is it's our mortgage servicer. Typically when we buy a home, the mortgage company gives us the loan, and it's pretty common that they sell it off to the mortgage servicer who actually handles servicing that loan. So while I say mortgage company, I really am referring to the servicer. And when you call them, at the telephone number that's on your monthly statement, you need to be ready to talk about the specific circumstances that you're in. You'll want to have your resources that you have available, any savings or any other financial resources that you may have available. And then you need to know what your current income and what it looks like going forward. So if you've just been laid off, you need to be able to tell them that this is what you're expecting going forward. And then you also want to have all of kind of your bills together, because they're going to want to talk specifically to you about what it's going to look like as things move forward. And having this information available can help things to go much more smoothly as you start to work with the mortgage company. Now, under the CARES Act, one of the really great things is that loans that are considered government-sponsored enterprise. So if your servicer is a government entity, you are automatically going to qualify for a special forbearance and also some other options that may be available that are not required to be available for a non-government sponsored loan. So first we're going to talk about what options are guaranteed to be automatically eligible. So if the loan is covered by the CARES Act, again, you have to make sure that you call that servicer. If you're not sure, you can call the servicer. You can actually go on to Fannie Mae or Freddie Mac's website. And if you just go into your favorite search engine, you can type those in and you can see who actually, if one of them owns the loan. Or if that doesn't work for you, you can go to the mortgage electronic registration system, and that website is there at the bottom of the screen. And you can actually type in your address or account number. I think it's account number, but there are a couple of different criteria that you can punch in to find out if you are in one of those government-sponsored loans, so that you know going into calling your servicer what you can expect. So once you know who your servicer is, if you find out that it's one of those government-backed lenders, there are a couple of things that you want to know. The first thing at this point is that your lender or loan servicer is not going to be able to start that foreclosure process until at least June 30th. And to be honest, that's been extended. I suspect it will continue to be extended at least another time or two. And then the second thing, and this is what I think is really critical, you can request a forbearance on your mortgage payments. If you have been negatively impacted financially by the pandemic. So if coronavirus has had some sort of impact, whether you've been laid off, maybe you've completely lost your job, or your hours have been cut, that is a negative financial impact, and you're automatically going to qualify for that forbearance. But you have to actually do something in order to qualify for that. You have to contact that loan servicer. And I know that loan servicers are incredibly busy right now, so being able to contact them can be a challenge. So I would encourage you to persevere and make sure that you get through to that loan servicer so that you can request that forbearance. The forbearance is automatically good for 180 days, and you can request another 180-day extension once it gets close to that time frame. But you have to remember that a forbearance doesn't stop the mortgage from incurring interest, and it's not going to stop you from having to make payments once the forbearance is over. So basically a forbearance is really, it's an agreement between you and your servicer that for this period of time, you're either going to be able to not make a payment at all, or you're going to make some form of reduced payment depending upon your income. And that's why when you call the servicer, you want to be able to have the information that you need available to you at the beginning. So that forbearance is not going to stop interest from accumulating as it automatically does. Now, once you come to the end of that, it's important that you ask some questions of your servicer, because they're going to either want you to pay it all up front, like the entire 3 months worth of payments that you've missed, or 6 months worth of payments, or they're going to allow you to pay back a portion of it over the course of time afterwards. So you need to understand what's going to be required before you agree to that, that forbearance, because you need to make sure that you understand it. Now, if you find that your loan is not government sponsored, you may still qualify for assistance. And to be honest, mortgage companies are going to be willing to work with you, because contrary to popular belief, mortgage companies don't want to foreclose. They want you to be able to successfully make your payments according to your contract. They're not in business to do foreclosures. But again, you have to be prepared with your financial information and that documentation that we talked about early on in this presentation. And the other thing that I think is really important to understand is that when you're talking to your loan servicer, you want to take notes on that. You want to record who you spoke to on what date and what you talked about. And then as you start to get paperwork and other things that come in the mail, you want to keep that in that notebook as well. That way, if anything doesn't turn out the way you thought it was going to, you've got the information available to you when you go to move forward. And then it's also really important to follow up and provide whatever financial documentation that's required from your lender. I've been with the Department of Banking for 16 years now. And prior to doing outreach, I actually answered our consumer services line where I took consumer complaints. And that really was in the height of the financial crisis from 10 years ago. And the reality was that what we heard time and time again from consumers was they weren't getting anywhere with the lender, but it turned out it was because they weren't providing the documentation in a timely fashion. You can't ask a loan servicer for a forbearance or a repayment plan without following up on what the steps that you need to take are. So make sure that you follow up with that information. And again, keep notes so that you know what you did when. And that can go a really long way if things don't go as smoothly as you had anticipated they would. So as you're starting to explore what this forbearance may look like, there are questions that you want to ask before you agree to anything. You need to understand what the criteria is going to be to determine if you're eligible. You need to understand if they're looking strictly at income, are they looking at some of your other expenses, and whether or not it looks like things are going to come back for you. There's a lot of different criteria. Make sure you ask those questions. And then if the mortgage company doesn't come back with the response that you thought, you want to make sure that you understand what your rights are if you don't agree. So if they tell you, no, you're not eligible, you want to make sure that you know what those next steps are for you. And then you want to ask if you're going to be required to make reduced payments, or if you'll be able to completely suspend the payments, or if there's some other kind of option available. Now, understand, again, with suspended payments, at the end of that agreement, you're still going to have to make up those payments that you didn't make. So you want to understand if the lender is going to have you make increased payments for a certain amount of time until those payments have been remade. You want to know, are they going to tack them on at the very end of the loan as a balloon lump payment that's going to be due? Or are they just going to extend the time on your loan? So if you've got 10 years left to pay on the mortgage, are they going to just make it 10 years and 6 months? Just make sure that you understand that, because you want to make sure that you're prepared with whatever you need to do at the end of that forbearance. And then if your financial situation changes while you're in the middle of this forbearance, it's important that you relay that information to your lender, because those types of things can change the terms of your agreement. So you want to make sure that you always stay in touch with that lender to keep them updated on what's happening with your financial situation, especially if your income suddenly decreases again. And then, you know, I had mentioned earlier that you want to make sure that you document the steps that you've taken. Keeping that notebook really can go a long way. I've talked to many consumers over my years with the department that didn't keep a notebook, and then they're struggling trying to remember what happened when. And if you don't have that information, you're not going to be able to support what you're telling the company, or heaven forbid, if you have to go to an outside agency for some sort of mediation. And then following up with that written documentation, I cannot emphasize enough the importance of following up, because you don't want to stop that communication process. You won't leave your lender any choice but to deny your request. And then once you have an agreement, they're going to send you copies and they're going to want you to sign them. Make sure that you get all of your agreements in writing and that you keep copies for yourself. That way, if you forget, if something, doesn't go the way it's supposed to, you have something to go back on to say, look, this was our agreement and this is what needs to happen. So that way you have access to everything that you need going forward. Sometimes mortgage servicers are difficult to communicate with. It's a challenge. I know that because I've had to deal with mortgage servicers. What's really great about the Pennsylvania Department of Banking and Securities, and that's the office that I represent, is that we license mortgage lenders and servicers now. 10 years ago, in the middle of the mortgage crisis, we didn't regulate servicers. So we didn't have as much leverage, but now we regulate the servicer, and that is even more important. What's really cool is when you call my office at 800 PA Banks, there's no phone tree. There's no one for this or two for that. A real life person answers your call, which is huge if you've ever tried to call state government. So this call is free. All of our services are free. Our staff are trained and they're able to help you understand what's happening. And we can help you figure out what your options or your next steps can be. And assuming, that it's a loan servicer that we regulate, and most of them are, unless it's one of the national institutions, we are able to contact them on your behalf, on the borrower's behalf, and we can mediate between the borrower and the lender. And when we license a company, we require that they provide us with a contact person that's not a general toll-free number. So it's typically higher up in the company, and we're going to be able to reach out to that company right away. When we start to work with you, we're going to take your written complaint, we're going to forward it to the servicer, and we're going to give them 30 days to respond. Typically, they respond much sooner, within a couple of weeks. But then we can start that mediation process, which comes in really handy, especially when you experience difficulty communicating with your lender. So keep that in mind. You can always call us, and our services are always free. When we are talking to you, we're going to be wanting to talk to you about all of the things that we discussed that you need to be prepared to talk to your lender about. We're going to talk about what your financial situations. We may talk to you about what options may be available. And then we'll talk and we'll communicate with your loan servicer and try to mediate between you and your servicer or your mortgage company. And if we need to, we may even be able to help you find a certified housing counselor in your community. And what's really great about working with those housing counselors is they are often more aware of opportunities within your community that we're not necessarily aware of. So, and they're able to sit down more one-on-one with you to discuss your specific situation more in depth. So housing counselors can be a really great resource. And for the most part, they're all nonprofits and they don't charge anything. And so when we start to talk about frauds and scams with mortgages, I'm going to emphasize that a legitimate offer, a legitimate help is not going to charge you a big fee for their services. That's really important that we understand. So a housing counselor can help you kind of wrap your head around what your financial situation is. It can be sometimes difficult to see you know, the big picture when we're in the middle of a financial crisis. So they can kind of help you see that bigger picture. And then they might be able to even help you find a manageable budget. They may help you see where you've got some spending leaks and maybe places that you can save some money so that you're better able to meet your financial obligations. And then they can often help you, again, work with that mortgage servicer. Sometimes you just need that third party when, you know, two people can't agree on something. Having that third party to help be that mediation can be very helpful. And then, like I said in the previous slide, finding those resources that you may not be aware of can go a really long way in helping with home retention. And you know, the reality is, when we're able to stay in our homes, it's better for us, it's better for our communities, it's better for everyone involved. So being able to help find some of those resources can be a big help. Now, if you're not sure where to find a certified housing counselor, you can go to HUD.gov. That's the department, that's the federal agency, the Housing and Urban Development. And then PHFA, the Pennsylvania Housing Finance Agency, is a pseudo-state agency that is available here in Harrisburg, and they also certify housing counselors, and you can find them on their webpage or calling them toll-free. That 800-635-4747 that you see there at the bottom of the screen actually is where you call to find a housing counselor, and they're based on the county. So that's really great because it, again, will help you with being able to know the services that are available where you are. So scams, they are a sad but true reality. And what a lot of us don't realize is once we become delinquent on our mortgage, scam artists can see that because that becomes public record, particularly when they start to contact the county sheriff's office about delinquency. All of that delinquency becomes public record, and criminals search those public records so they can find people who are in a financial crisis that they can take advantage of. So remember, if you're struggling financially, you become a prime target for criminals and scam artists. So before you start to talk to anyone who contacts you directly, make sure that you do your homework. Check them out with PHFA or HUD to make sure they're qualified to offer you assistance. The reality is that most nonprofits don't have time to search records. They're busy helping other consumers. So if someone's contacting you out of the blue or they're sending you something in the mail, there's a good chance that that's a scam. Unless you receive what's called an Act 91 from your lender. And that is telling you that the mortgage company intends to begin that foreclosure process. And the Act 91 makes you aware of programs that may be available to help you through that crisis. And that's with PHFA. They have some actual loans that they can make to individuals who have fallen delinquent. I don't want to spend a lot of time talking about that, but know that there are many options available to you, but you have to be very careful providing your personal information to someone that contacts you. So as you're talking to someone, you need to really be careful about an offer that's too good to be true. The reality is that when someone promises you a result, that is more than likely a fraud. No one can promise a result except for a loan servicer. No one else can make a change to your loan but the loan servicer. So you need to be aware that anyone who tells you that it's guaranteed is probably not someone that you want to work with. And you also need to be careful about upfront fees. If someone tells you that they're going to promise to help you with your mortgage situation, but they need $500 or $750 or even more to help you with this process, you need to run like the wind and get away, because upfront fees for service are another huge red flag. If you think that an offer for help could be a scam, I would encourage you, again, to contact that Office of Consumer Services at my office at 800 PA Banks. They are very familiar with mortgage foreclosure scams and are able to help you, again, to understand what's happening and to help you with finding resources that are credible. Again, we've got this guaranteed loan modification. There should never be upfront fees. Remember that the only people who can make you and approve a loan modification is that loan servicer. And if someone's asking you to wire transfer money, again, save your money and find someone who's credible. In the years that I did consumer services, I can't tell you how many times I talked to consumers who were told that we're going to guarantee you this loan modification. We're going to get your interest rate down to 1 or 2%, but you have to wire transfer me money, $750, $1,500. Once you've sent that wire transfer, you can kiss that money goodbye because you're not going to get it back. Since that time, prepaid money cards have become the new wire transfer. So a lot of criminals and scam artists will tell you, go buy this green dot card, go buy this iTunes gift card. I still can't figure out why that's a thing, but the reality is it is. And again, once you've given the person on the phone that information from that card, that money is gone, typically within a couple of minutes. So remember that if you're asked to wire transfer or buy a prepaid card, that's a red flag and you don't want to send your money. Again, I can't reiterate enough that our office is available to help you. And again, during regular business hours, we've got people who are going to answer your phone. You call, someone picks up, Department of Banking and Securities, how can I help you? And then once you've talked to that person, they're the person that you're going to talk to throughout the process that we're trying to help you, that we're trying to mediate, that we're trying to verify information for you. So you're not going to have to worry about being bounced around from person to person. As having worked in that office, I can tell you that those people genuinely care about what's happening and they want to help you financially stay in your home. And they'll do what they can to help you reach those goals. So that's really important. Here's my contact information. I'm the investor education coordinator, but I have a lot of knowledge. I'm happy to answer any questions. If someone needs more information, I'm happy to provide that. We do have a lot of resources on our webpage, and clearly I didn't mention that in my presentation. You can go to dobs.pa.gov, and under the consumer tab, you'll find about information about all of our programs, our printed materials, and other types of important information that consumers need to know. it also, you know, one thing I didn't mention is what our office does. So I told you that we license mortgage servicers and lenders, but we also license check cashers, pawn shops, car dealerships that offer financing. We have 200 banks that are chartered in Pennsylvania. That means that we make sure that they're financially safe and sound. And the securities part of our office actually has more than 200,000 investment professionals that are registered with us. So on top of you being able to call the 800 PA Bank's number to get information about your loan servicer, you can also call with concerns that you have about any of those other financial institutions or companies that we regulate. So if you know, you're concerned about something that your check casher is doing, or your car finance company you're having issues with them, we're actually able to mediate with consumers between all of the companies that we license. So we can be a big help. I find when you sit down and think about it, there really isn't any person that's not somehow touched by the companies that we regulate, because, you know, we all have financial lives, whether it's a bank or credit union, or it's a check cashing company, or a debt management or debt settlement company. They all have to have licenses. So know that we are a resource in a time of financial struggle.